Good to have you with us. Thanks for tuning into another edition of Investor's Guide. I'm Avni Raja, and on this show, we make it simple for you to start planning your finances, help you understand personal finance as well as financial planning. Now, over the last few episodes, we've been talking about the various kinds of mutual funds that are there and how they all fit into your portfolio. Now, today we're going to talk about a very interesting category called as international funds. These funds help you gain an international exposure, help you invest in places outside India. What are the risks? Do they make sense for you? What you should know, all of that is lined up ahead. And to explain more, I'm being joined by Feroze Azeez of Anand Rathi Wealth Management. Feroze, thank you so much for joining us on another episode of Investor's Guide. So we're talking about international funds today. Now, this is an interesting category of funds. If you can first help us understand what exactly this category does before we get into how it fits into one's portfolio.
Avni, as the name suggests, an international fund is a fund where Indian investors invest money in the mutual fund. The money collected is transmitted to invest in the global capital markets, especially the equity markets. For example, if you're speaking of an US equities fund, global equity fund, US feeder fund, the money is collected in India. It is sent to the US. Converted into dollars, sent to the US to invest in US-based stocks. So international funds are funds which invest globally, not in the Indian equity market or the debt market. So these funds could be of two kinds. One where the money collected in India invests the collected money into a separate fund which is already existing, which are called feeder funds, which feed into another global mutual fund. There could be another fund which collects money and directly invests in stocks going back in the US in this illustration. So international funds are funds which invest globally. There are two types of international funds. One, which are a feeder fund which collect the money in India, invest into a mutual fund which is already existing in the US, in this example, of course. There could be another fund which collects the money and directly the fund manager invests in stocks. So international funds are a good way to diversify the money beyond the Indian capital markets.
So Feroze, the next question that comes to mind really is that is this something that all mutual funds offer as far as an investor is concerned? And secondly, the categories of international funds, because you can have a fund which is perhaps is focused on a certain asset class. It could be gold, it could be equities outside India. Or you could have a region-specific fund that is focused on a specific country. It could be US, for example. If you can just help us understand that.
Yeah, Avni, not all asset management companies may have a global fund. Some of them do, some of them don't. But the entire mutual fund industry has 40 schemes to offer in the global category. In this category, we have 40 schemes with 11,500 odd crores of assets under management in this category. These schemes are across different AMCs, but the top 5 schemes, the largest 5 schemes, almost have 5,000 to 7,000 crores out of this 11,000 crores. So it's a very narrow category with 40 schemes and top 5 schemes itself having 60% of the total money. So not all of the AMCs are an expert to invest globally. So quite a few of them have chosen not to have a global fund. But like you asked, Avni, the most popular category in this space which invests in the region, and the region of course is the US region, because that's one of the largest or the largest capital market available. The largest fund, to give you a sense of this landscape, is a Franklin US feeder fund, which is about 2,500 crores in size.
Okay. All right, and let's also now talk about the advantages and disadvantages. I mean, we just spoke about some of the advantages. It helps you gain an international exposure. Somebody who wants to diversify outside India is possibly a good idea, to get into this space. But we can also talk a little bit about the disadvantages, because it does increase one's risk, and one needs to be aware about that.
Yes, Avni, advantages are several. Of course, like you mentioned, moving money from India to elsewhere has one subtle advantage of having dollars in your portfolio. If you have an objective in your goals listed down of probably a foreign tour or sending your child abroad, so these funds start accumulating dollars for you over the years, which helps you fight the depreciation of the rupee, which has been happening for the last few decades. So that's one advantage which is lesser known. Of course, the fact that if you invest globally, all your mutual funds will not perform similar in a given period of time. So that's one more advantage. Of course, coming to the disadvantages, like you said, Avni, the risk of the unknown, because when you are investing in the globe, there are going to be regions like if it's the US, of course, the stocks are going to be, the market is very deep. But if you're investing in a China fund, you may want to be more wary because of the unknown. So there are risks of going outside the country because it is the fear of unknown. The Indian capital markets are well understood, well comprehended, and you are able to research the fund manager and his history and its track record very well. But in global funds, you have that little darkness which can create some negative surprises.
Right.
Coming to the gold fund,
yes.
There's one fund which invests. Sorry, Avni. Yeah,
no,
please go ahead.
Please go ahead, Feroze. Go ahead.
None of these international funds invest directly in gold, but there are funds which invest in gold mining companies. So largely, the entire classification or the category itself of 40 schemes invest more or less in equity. Because globally the interest rates are very low, so investing from India into global debt doesn't make too much sense. So largely it's equity which these schemes invest in, because that's the true diversification merit which you relish by moving outside the country. Some portion of your monies which you need.
Yes, absolutely. And also, Feroze, from an investor's perspective, what else should one know in terms of, who should be investing in these kind of funds, the kind of taxation, and also importantly, when it comes to putting money outside India, how much are you actually allowed to do so?
See, Avni, these funds, since they are domiciled or they're located in India, you can invest as much money. There's no upper cap because you are investing in a fund which is listed in India, which is made in India. It's an Indian trust, so you can invest as much. But from a personal finance standpoint and a prudence standpoint, I would recommend not more than 10 to 15% in international funds, especially for those people who have objectives of a dollar expense, like child's education abroad might need you maybe $100,000. So you may want to start doing a systematic investment plan in an international fund so that you are accumulating dollars over periods of time. And one more thing you need to know about these funds is there could be a duplication of expense. Like if the money is invested in another fund in the US, there could be an expense ratio of that fund, and there is also an expense ratio of the domestic fund. So there could be two layers of charges. So you have to be very vigilant in terms of the total expense you end up paying when you make these investments in international funds.
And finally, Feroze, a quick word on the taxation.
The taxation of international funds, in spite of the fund investing in the equity category, the taxation is going to be equal to debt funds, which implies that 3 years is what it will take for you to leap into the long-term category. And once you get into the long-term category, the relevant tax slab will be 20% plus the cess and surcharge. If you have redeemed the money before 3 years, then it will be categorized as a short-term capital gain, and it will be taxed as per the slab or the marginal tax rate the person investing falls into from the Income Tax Act perspective.
All right, we'll leave it there, Feroze. Thank you so much for joining us and putting that into perspective. With that, it's a wrap on this edition of Investor's Guide. I hope that this episode has helped our viewers understand what exactly are international funds and how they would fit into one's portfolio. Thank you so much for tuning in.